What you need to know about insurance companies. Life insurance companies want you to live a long time. Why? Because they know the vast majority of their insured will outlive their insurance. So they get paid all that sweet, sweet premium money and don't have to pay out anything. Annuity companies, on the other hand, they want you to die earlier, so they don't have to pay out the annuity. A lot of times, life insurance companies are annuity companies, so it's somewhat of a competing thing there. They want the annuitant to die early, and they want the life insured to live beyond their life insurance contract. Long-term care companies who have long-term care insurance companies, what do they want? They don't want you to live until you're 100 years old on their dollar. That's a fact. You know what I'm saying? They want you to die early too. Remember, long-term care is caring, not curing. I just got my man Pete from New York. I don't know if he's. I think he was. Actually, speaking of helicopter pilots, I think he was a helicopter pilot. Now I'm thinking about it. We used to do these seminars on long-term care all up and down New York. And the guy was just a freaking legend in terms of his seminar. He always stuck with me. Long-term care is for caring, not curing. We're not fixing you. We're caring for you. So long-term care insurance companies, they don't want you to live a long time when they're done. That's for a fact. So generally speaking, insurance companies want to get the premium and not have to pay out any benefit. Healthcare insurance, a little bit different though. So we know that healthcare companies, insurance companies, they definitely don't want you to live in a long time, because they don't want you to be on their payroll, essentially, not the payroll, on their claims, if you got issues, for years and years and years and years. They don't want that. On the other hand, I don't think, but I could be proven wrong there. I wonder what the P&L, profit and loss statement, would be on a health insurance company. I don't think they want you sick either, right? Because I can't imagine a health insurance company is making a lot of money when they have to pay out claims. So I think the health insurance company wants you, and again, this is something I'm ignorant of. It'd be interesting if any of you guys are in the health insurance business. Obviously, you get paid premiums. The health insurance companies do, as long as you got insured. So I would think, just like a life insurance company, they'd like to get the premiums without having to pay a claim. That's like a homeowner's insurance company. They like to get the premium without having to pay a claim. So I think the health insurance companies definitely want you healthy. They just don't want you to live a long time, if that makes sense. Seems somewhat counterintuitive, doesn't it? Because generally the healthier you are, the more you're going to live. So it's almost like health insurance companies have an incentive to keep you healthy up until you're 70 years old. Then they'll say, hey, see ya. I mean, look, I'm just being silly there. So, but don't take me seriously there. So isn't that interesting? So life insurance companies want you to die late. Annuity companies and long-term care insurance companies, they want you to die quick. Health insurance companies, they want you to die quick, but they want you to be healthy. So the question is, the medical industry, do they want you to be healthy? No. Why? Because they get paid for you being sick. Talk about caring, not curing. They're going to care for you, but they certainly aren't going to cure you of any issues that you have, because it hurt the bottom line. So what's the best thing you can do about that knowledge? Well, if you're going to take an annuity, for instance, you want to be healthy so you can maximize your benefit. If you're going to take life insurance, well, you want to take life insurance while you're as healthy as you could possibly be in order to pay the least amount of premiums. You never want to, like for instance, I'm walking this neighborhood. You never want to buy, well, in fact, you can't. If your house is burning down, you can't go out there and buy fire insurance, all right, homeowners coverage. It doesn't work like that. Unfortunately, the medical insurance, health insurance is so screwed up that we allow people nowadays to say, hey, man, I'm not paying for any premium, but if I get sick, I'll go ahead and buy insurance. Well, at that point, it's not insurance. Insurance is to cover catastrophic losses that you have to pay into a pool of money with other insureds. And that's how insurance works. So in this case, it's just subsidizing. We're subsidizing people who didn't pay the proper amount they should pay. So with Obamacare, all the negatives on Obamacare, if you actually think about it, the individual mandate actually made sense. It made sense because, like, you can't just show up day million and say, hey, I'm sick, I need coverage, and we have to provide it to you. That's crazy. We're going to penalize you for not having coverage. And it's actually funny because my wife used to work, as a part-time H&R Block person, and these guys would come in, these poor kids, generally speaking, not poor kids, but poor people, and they didn't have Obamacare, they didn't have any insurance, so they'd get a penalty for not having insurance, and they get pissed because it come out of their tax refund. They're like, what the hell? It's like, you got to carry insurance, man, because otherwise you are basically a free rider. No, you're peeing on Pablo. Don't pee on Pablo. you're a free rider. Actually, Finney just peed on me the other day. I was like, dude. So I was sitting there against this bush, had my feet out like that, and then he started peeing on me. I was like, what the hell? I was like, yeah. But he doesn't, now he's just like twinkling. Twinkle, 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 little star. So anyway, it was very interesting. So the best thing you can do, obviously, is you want insurance. It protects against catastrophic losses. You want the cheap insurance you can get, which means you got to be as healthy as you could possibly be. All right, that's just a fact for life insurance. For an annuity, well, insurance is there. You want to live as long as you possibly can be. So to get the max amount for your annuity, you want to live as long as you possibly can. Long-term care, well, that's, if you're going to get insurance, we don't want you to use it because we don't want you to go to a long-term care facility. Not much you can do about that. If you're going to get the insurance, you're going to pay for it, just like homeowners insurance. You don't want your house burning down, and you don't want yourself burning down. That's just the way it works, you know what I'm saying? But you get it when it's cheaper. So like I got my life insurance when I was 47, very, very healthy, very cheap. And I got like $1.5 million benefit for not very expensive at all. I know some people, I was talking to a guy the other day, he's like, I'm 62 or 63, should I get life insurance? Like, dude, yeah, I'm not telling you not to do it, but it ain't gonna be cheap, man. That's just a fact. He didn't need it, by the way, but I get that question on occasion. I'll get questions a lot of, I'm 65, should I get long-term care? I said, man, you should have got it when you're younger because it's a hell of a lot cheaper when you're younger. With that said, you haven't had to pay the premium. So, I mean, we got long-term care when I was 40, 37, 40, something like that. My wife was 4 years younger, and it was very cheap, but we've been paying, roughly, I think it's $85 a month for me. I think $50 a month for her, going on when I was 41, I'm 55, 14 years now. Yeah, definitely. Yeah, it was, I was 41. I mean, that's just money is gone. But if I had an issue, I would have had a coverage. And that's the thing with insurance. Anyway, just something to think about. I figured I'd share that with you. All right, God bless. Love your thoughts.